Hi everyone, welcome to the Absolute Wealth Advisors investment update for the period ending 31 December. I'm joined by Paul Barrett here, who's just going to take us through what's happened in the markets for the last quarter and 12 months, as well as what we see some of the challenges and opportunities coming forward. Thanks, Paul.
Thanks, Dean. Hope everybody had a good break. Equity markets were really strong between October and December. Aussie equities did just over 2%, international equities 7%, US equities 10%, listed property just over 10% as well. And what that meant is over the year, it was also a very strong year, with Aussie equities at 17%, international equities and US equities at 29%, and listed property trust at 27%. The only real negative part of the market was bonds, which fell 1.46% in the quarter to December and almost 3% for the year. And that's because we've witnessed some inflation towards the end of the year, which resulted in rising interest rates, and rising interest rates caused bond prices to fall.
Yep.
But what does this all mean looking ahead? The big issue in the markets at the moment is the debate as to whether rising inflation, which is being caused by supply problems and employment bottlenecks, is going to be long run or transient. If it's going to be long run and remain high, that will result in central banks around the world raising interest rates, and there's a point at which raising interest rates become negative for markets, and that would lead to a fall in both property prices and equity prices. At the moment, the market's not sure. And so what we're seeing is some volatility as markets gain confidence that the inflation will be transient and therefore markets will be stable, or they get worried that it'll get ahead of itself and we'll have a problem. What does AWA think about this? Well, we are cautious. Certainly we feel we're coming to the end of the 20+ year long decline in interest rates. Anybody who was around at the end of the 1990s remembers at the end of the 1890s.
We were all here in the 1990s, Paul, but which time period were you actually referring to?
So at AWA, we're cautious because we feel we're coming to the end of the 20-year plus decline in interest rates. Anybody who can remember interest rates at 18% realizes that we're now at 2% mortgage rates. And that has had a big impact on pushing property prices up and equity prices up. And we don't feel that decline can go on much longer. And with the return of inflation, it is likely that interest rates will start to rise. It's just a matter of whether that will be an orderly adjustment to rising interest rates or whether it's going to get a little bit messy. But what does this mean for investors? Well, first of all, you should always be checking your portfolio to make sure that the investments that you have in your portfolio are investments that are high quality and you'd be happy to hold them for the long term and through market cycles. If you've done that, you're really in the position of one of three scenarios. The first one, if you've got a long-term portfolio that is growing to be accessed in the future, just do nothing. Hold good quality assets through the cycle, because there is plenty of research which shows us that trying to time markets by selling high and buying back in when markets are low almost always results in worse returns. The second scenario you might be in is if you are living off the income. You might be a retiree living off your superannuation, or a high net wealth person living off your income. In this scenario, make sure that you've got at least 4 years worth of cash and term deposits, plus a downside scenario expectation of the future income that will come from your investments. This means that you won't have to sell growth assets for at least 4 years, and that should get you through the down part of any market. So again, just adjusting the portfolio to make sure you've got sufficient liquid assets. The third scenario you might be in is if you've got new money to invest. Now, there is no certainty that markets are going to correct. There's just a possibility. So you don't want to hold off investing in growth assets forever. So what we recommend is that you set up a program of gradually investing a small portion of your portfolio into the market over time and being ready to accelerate that if markets do fall, so that you can average into the market while assets are low. Now, if you've got Absolute Wealth Advisors managing your portfolio, these are things that we're doing for you all the time. Checking that your assets are good quality and making sure that your portfolio is set up for your purpose, whichever one of those scenarios you're in. But if you've got any questions, please call your advisor, Stella and or myself at Absolute Wealth Advisors, and we can talk to you about your specific portfolio.
That's great, Paul. Thanks very much for the quarterly update. I hope everyone enjoyed the update, including the joke in the middle, which that was part of it and planned, of course. And we look forward to sharing further updates with you at the end of the next quarter. Have a great afternoon.